India, probably most conspicuously, is likely to be, or is already becoming, the main beneficiary of what folks call the China plus one strategy. If they've got to move, diversify supply chains, hey, India's not a bad place to do that.
Completely agree, Martin. I'm sure this pitch will certainly work with the HNI fraternity, especially the NRI fraternity. What we tell them is that India's growth story is greater than the average. Today, our Indian growth of FY24, we projected about 6.2, which is greater than the long-term average, which says that we are still in a growth cycle. Point one, the problems which the globe is grappling with, which is interest rates, which is from the resultant higher inflation. India, inflation is lower than the long-term average. We are at 4.8. The long-term average is 5.8. Whatever the world is grappling with is business as usual for India. So we've always traversed the path of higher inflation, higher interest rate. So that doesn't bother us. The fiscal deficit, we have got 11.6% growth in the indirect tax collection, about 18% growth in the direct tax collection. So our fiscal deficit, which we had projected of 6.4% for the full financial year, we have just done 5.9% fiscal deficit for the first quarter. So I personally think that all the macro variables are stacking, and we are in the growth cycle, and the liquidity, which is still very low, domestic money has not come in. We have 670 lakh crore of Indian household savings, which we just did a study, looked at RBI data. Only 4% of that is Indian mutual fund equity. So there's a lot of money sitting outside in conservative assets which are not contributing to Indian growth, and there is a paradigm shift and flight of capital from the Indian household savings to equity to contribute to the India growth story further.
Feroze, I got to ask your shop, Anand, Rathi, Wealth. Are you also trying to steer clients to or into private credit?
No, Martin, not in private credit, because I think that's a complex variable. So we don't let HNIs get into anything which is little more a complex structure. We would rather have concentrated credits only with very, very good quality companies. And we basically, at the current juncture, only look at government paper credit because the spreads are very low in the Indian market. The AAA to G-Sec spread is one of the least over the last decade. So you're not getting remunerated enough in a high interest rate cycle to actually spread your money to lower credit or any private credit for that matter.